What's going on, everybody? It's your boy C-Zar, and we are talking about a few different things in this video. Actually, we're going to talk about the crypto markets, the stock markets, and the United States Federal Reserve interest rates. Okay, September coming up here. We do assume that the interest rates are going to get cut. We're going to get rate cuts here in September. This has actually been something that Jerome Powell and the Fed has been talking about for months now. It wasn't something that's new news as of the Jackson Hole event, although that was the most kind of clarification that we've had. They talked about this months out, and that September was a appealing month for interest rates to be cut, and they essentially confirmed it with that most recent meeting in Jackson Hole. I want to talk about this because a lot of people seem to think that this implies that the market's going to dump. September is a bad month for Bitcoin, which it's not actually. We're going to prove that too, that it's not a bad month. Maybe in another video. Maybe I'll prove it in this video. Just understand it's not. It's actually not typically a bad month. I know that it's typically a red month, but it's neutral. It's like a neutral month, right? Like this month's a red month, but we're down 6%. It's really not that bad. August was not a bad month. It was a boring month. It was a little bit of up, a little bit of down, really just moving sideways, being boring, right? Shaking out the markets. That's how September is normally. And the last two Septembers in a row have been green, but I'm getting beside the point. A lot of people assume that the interest rates are going to, that every time the rate cuts happen, that the market goes down, and that's just not the case, okay? It depends on how the rate cuts happen, and hopefully by the end of this video, all of you will understand that cutting rates slowly and not fast, not quickly, is actually beneficial to the markets and not detrimental, right? It allows for the market to grow. We can grow during rate cuts, we can grow during rate hikes, but let's look at this now. Let's stop talking. Okay, hit the like button, subscribe, and let's just get into this. Okay, so I've got a few different lines here. Let me explain what they are. Right, the blue line is the Federal Reserve interest rate. So you can see that here, right? That's 25%. That's 4.5, right? 450 basis points. The S&P 500. Let's actually make this one. Oh, well, Bitcoin's red. Let's make this one red. S&P will be red, and then we'll make Bitcoin orange, right? Is that easier to understand, right? There we go. And then the blue line is the Federal Reserve interest rates. Okay, so we're going to use the S&P 500 and compare it to the Federal Reserve first, and then we'll get into the Bitcoin stuff, mainly because the S&P has existed for a lot longer, right? Dating back to 1972 here. We're not going to go over every single detail, but just looking here, you can see that as rates are increasing, the stock market actually tanks. Do you see that? The rates are increasing, so the stock market tanks. So we tank whenever the rate cuts hike, too. The stock market starts to increase as rates are actually cutting. Isn't that something? But when they cut, notice how they're cutting here. It's pretty slow in comparison to like this drop over here. When we cut rates fast, notice how the stock market corrects. It crashes. When we cut rates fast, notice how the stock market corrects. It crashes, right? But whenever the rate cuts are happening, and then here, at a fast rate even too. Actually, right there, yeah, you dropped. So right here, if we put a line right there, right at the tip of that peak there, let's get it, right there. You can see the stock market did crash going into that cut. But as we continued to cut, and the cutting actually slowed down, the pace slowed down from there, the market began to grow. And then as rates came back up, the market began to grow as well, but at a slower pace. The majority, and if we zoom in on this, we actually look at this here, notice that this kind of fast pace right here, this little segment was faster than this little segment, right? That fast segment happened while we were decreasing rates. We went from, if we're looking at the basis points, we went from about a 10.5 or 11. Well, what is that there? That's about a 11.5 down to a 9.5 over the course of, what is that, from April to July. So May, June, July, right? That's actually still pretty fast, but that's not these crazy drops that we've seen later in the future where we get wrecked in the markets, okay? Market is moving up, rates are going down. Notice this, right? This whole time we have interest rates coming down, and is the market in pain? No. Absolutely not. The market's growing. It's flourishing, actually. When is the market growing at a slower pace? Well, when rates are increasing, right? Whenever the rates decrease, we continue to grow, right? Go on a little bit of a pause here. Rates increase and we actually start to move up. It's not a direct correlation. Rates can increase and the price moves up. Rates can decrease and the markets move up. They can both crash either way. It's about how it happens, and it's about what the economy demands, right? It's not so simple as, oh, rate cuts mean we're dropping. But whenever we do cut rates at a fast pace, the reason why the market reacts negatively to a super fast and tenacious rate cutting is because when the Fed only does this when we need to inject money into the economy. Whenever we need to bring loans down so that people can we can artificially inject the economy with more funds, essentially, right? It's to stimulate the economy, and we only do that in times of weakness. So it makes sense that in times of weakness we're doing, you know what I mean, right? That's what happens, and then things stabilize. Things start to stabilize, right? We're cutting rates. We're cutting rates. Here we're even cutting rates, and the price is moving up. But notice how we're cutting rates here, and it's at a slower pace, right? Things are slowing down. The market reacts positively to that. It doesn't matter if it's slow or fast, or it doesn't matter if it's up or down. It matters if it's slow or fast, right? Because immediate reactions from the Fed, whether it's an extreme rate hike or an extreme rate cut, that's what impacts the market negatively. And here you can see that as we're moving sideways, there's no decrease or increase in the interest rates. The market is flourishing. But as we start to increase at a rapid pace, the market still grows, but at a much slower pace. Because again, it doesn't matter up or down. It matters the speed of this, right? We go on pause and look, the pace picks up again, right? You drop fast, we cut these rates really, really fast, and the market tanks. It just tanks. It's time and time again, that's what happens. Now we're going to compare this to Bitcoin, okay? We don't need the S&P. I mean, we can use the S&P, but that's just a little walk through history because there's a lot more history there. Rate cuts didn't happen for a long time. Bitcoin's doing its thing, whatever, irrelevant. We start to increase rate cuts, or we start to increase rates. Rate hikes? There we go, and the market starts to grow. Market starts to grow, whatever. So we can grow while rate hikes are happening, right? Rate hikes continue, and the market decays. We have a bear market literally in the midst of this, and then as the rates stop hiking, as they plateau, that's actually whenever we start to grow. Rates drop, and that creates a stagnant part in the market. Why did rates drop at such a fast rate? Because we had an economic catastrophe in the United States and around the world. COVID happened, right? The market was sideways. We cut rates, and all we did was move sideways, and then we still pumped. Even though this rate cuts happened, we didn't go through a correction here, or I shouldn't say a correction. We didn't go through a recession with Bitcoin, a bear market. We continued to grow, right? But it was only after these rate cuts were done and we were moving sideways, we were stagnant, there was some stability, right? Here, we start to rate hike at a very fast pace. Again, it doesn't matter. We're moving up with the price here, and the rates, the interest rates are going up. But when they move up at this pace, that's negative for the markets, you see, right? Because again, these fast changes signal that there's instability in the markets. And when there's instability in the markets, risk on assets like stocks and crypto are less appealing. People hoard their money or their gold even, right? We're still increasing rates, but at a much slower pace. Hence the beginnings of the bull market. Hence the end of the bad times. Rate cuts have happened in August of 2024, going into September, and then even going into December of 2024. And we still grew. We still moved up throughout this time. We've still grown, but it's happened slowly. The difference here, right? Last time we cut rates at a very fast pace, it stagnated the markets. Here, we've moved up slowly as the rates have moved down slowly. Everybody's saying Jerome Powell is dropping the rates too slowly. I think he knows what he's doing. I think he's seen these charts before. I think he understands how the market reacts, and that the best way to show that our economy is strong is to make these moves slowly. It's not to make them fast, okay? What we're talking about here in September is not a massive rate cut. We're at 450 basis points. They're talking about dropping 25 to 50 basis points. That means from a 4.5 to go to 4.25 or 4, right? That puts us here, right here, at this line, at the lowest in September. That's a good thing. Interest rates are going to go down. People are going to be able to lend money at cheaper rates and borrow money at cheaper rates, and that stimulates the economy. Global M2 money is coming up. Everything's on the up and up, you guys. We are not done. This bull market is not done at all. All right. So hopefully by the end of this video, by this time now, hopefully a lot of you at least understand that it doesn't matter if the rates are hiking or cutting. And pardon my words. I feel like I stumbled on my words a lot there, but you know, with the rate hikes and the rate cuts, it's like I get tongue-tied there. But it doesn't matter what direction they're going. It matters how they go. Because again, a fast, a quick, a rapid adjustment implies there's some instability in the markets, and the Fed needs to take action to fix it, right? Or at least try to fix it. And that's not good. That's never good for risk on assets, which we're in crypto and in stocks. But whenever it's a gradual thing, they're shifting, that implies that there is stability in the markets. And if there's stability in the markets, they can make these gradual shifts. It doesn't need to be such an immediate shift that needs to happen, right? Ideally, we're going to bring rates down. But I think the fact that it's happened slowly is only going to allow this market to grow more, you guys. And I would expect, what I'm expecting to happen is this, okay? Talking about Bitcoin now and with the rate cuts specifically. Whenever we see interest rates, whenever that FOMC meeting happens, I'm guessing that Bitcoin will be at its lows, okay? I'm thinking that the price continues to move down now until about down to about 100 and anywhere from 102 to 106,000 dollars. We're at $109,000 now, and we're going to continue to move down until we see that FOMC meeting. And then once that FOMC meeting comes out, the rate cuts are in. We're going to pump right through the roof. Maybe we pump a little bit beforehand, dump a little bit beforehand, but all in all, we're on the down low until that happens. And how low are we going to go? I don't know. We look at the liquidation levels over the past 30 days, and we're on Bitcoin here. Look at BTC. A lot of these longs get cleared out at 106K, but as we continue to go down, people keep longing, so that'll get pushed down even further. I really wouldn't be surprised if we did return to prices that are right around $100,000, if not just above there. But here we are at $108,000, $109,000 now. It's not that dramatic, right? It's not that dramatic at all. Hit the like button, subscribe if you want to see more content like this. Thank you all for being here. I hope this calms the nerves. If anybody's thinking that this means death to Bitcoin, it's not. The bull market's still on. We're going to $500,000 by the end of the cycle. That's happening. Okay, take care. Bye-bye.